Thanks for watching this short video. It focuses on how to record or correct a bounce check that you might have received from a customer. So you can see in my register here, on the 19th, and everything has happened today for me. So Loser Machine Company paid me 500 bucks. I received the payment against the open invoice. I deposited it from undeposited funds to the checking account, so it shows in the register now. And now I know I'm never really going to receive this, or it bounced. Plus, there's a $40 fee, insufficient charge fee, or NSF fee, that I have from my bank that I have to consider as well. So how do you go about writing that, if you will? So first off, you're going to go to the products and services list, the gear icon in the upper right of your client QBO file. And then under lists, you have products and services, because we need to create two bounce check items, really, and you're going to use service items for that. So I created just the bounce check, and it's a service. Just use service or non-inventory part, right, obviously. And these are single-sided items, and they're not taxable. So this one is the items mapped to the checking account where the bounce check is, and it's non-taxable. This is going to pull the money out when I go create an invoice. The other one, the bounce check fee, it's just the fee that you receive from the bank. This is going to be mapped to either an income account or the bank fee or the bank fees expense account. But I'm actually choosing income because this item is going to be in my new invoice to the customer that bounced the check to begin with, right? So I'm going to want to receive that money as well. Not just what they owe me, but now the fee there. So it's really up to you. So the next step, once you have those items set up, is to go to the plus sign at the top of the program or from sales window or the invoice sub-navigation window and go to create an invoice. It's going to be a new invoice to that same customer, Loser Machine Co., who sent me the bad check. Okay, so here's the new invoice to that same customer. Got the customer here, bounce check item. This is the one that's mapped to the checking account, and because this is the credit area of an invoice, right? So this is going to pull the 500 bucks out, and then I have the bounce check fee of 40 bucks. You can up it here. I'll leave that to your discretion if you want to make a little money off of this. Right now, my new invoice to them is $540. Now, to see what's happening behind the scenes, the journal entry behind the scenes, if you will, or your quote-unquote Control Y report, just click on the More tab, Transaction Journal. So I have $540 is going to be debited to AR, right? So they're going to be sending me a payment, and this check better not bounce, all right? And then I'm going to be pulling the 500 bucks out of the register. And then here's the $40, that it increased in revenue to me that I'm adding to this invoice, right? Because right now I'm going to go to the plus sign. So now you know what's happening behind the scenes. I'm going to create an expense for the NSF charges. So here's my bank, and then I have the bank service charge account, just so it's on the books, right? 40 bucks, and this is going to debit that expense account and credit my checking account $40. Now here's the interesting note that the advanced certification writers who came up with this workaround, although I believe it's an old Sleater trick, but still, something to consider about the aging of the original invoice versus this new one I created, right? Because I want that aging to continue. When I received the payment, it stopped that. So how do I get the aging to continue? Because, mine's all today, but what if this happened over a month or 6 weeks or 2 months or 3 months, right? We want that invoice aging to be appropriate. So here's their suggestion is that if you create an invoice for the bounce check as the date bounces, this invoice will begin to age based on the bounce date. You may want to apply the check that bounced to the new invoice instead and leave the original invoice unpaid so that the original invoice continues to age. The original invoice was not satisfied with the check that bounced. When you receive the replacement check, you would then apply that to the original invoice. So here's where you go to do that. Just click in the search field or just find your payment, depending on a report or from the customer record. I'm going to look at the payment here. Notice now there's two invoices. So what they're suggesting is you leave the original one open, uncheck that and check off that one instead so that this one continues to age. And that's their suggestion. Up to you. Now to tie this off, let's look at some of the accounting in the background. Let's go to accounting in the left-hand panel, and then here, let's go into the register. So here's the 500 I got that really wasn't. And then, so the invoice that I created pulled the $500 out, right? So I didn't actually have that. And I've also incurred $40 worth of bank service charges in the register. So that's working there. And then now if I go to sales in the left-hand panel and then customers and drill in on the particular customer that we're looking for, it's going to be Loser Machining Company. An invoice that's still open. This is the original one that's still aging from way back on that date. And then, I have a payment of 500 it's closed, and then I still have a partial 40. Remember, because we moved that original payment against the new invoice. So when they send me the payment, it'll be for this aging invoice, and then they still owe me $40. Either way, I probably need to get on the phone with them to explain this, but this is how you would record this within QuickBooks Online. Thank you.